Accounting conservatism is a principle in accounting that emphasizes caution and prudence in the recognition and reporting of financial information. It involves erring on the side of understating rather than overstating assets, liabilities, revenues, and expenses to ensure that financial statements reflect a more cautious and realistic view of an entity's financial position and performance. Key points about accounting conservatism include: 1. Principle of prudence. Accounting conservatism is based on the principle of prudence, which suggests that when faced with uncertainty, it is better to err on the side of caution and adopt a more conservative approach to financial reporting. This means recognizing losses and liabilities as soon as they are probable, but only recognizing gains and assets when they are realized. 2. Conservative accounting practices. Conservative accounting practices include methods such as using lower estimates of asset values, recognizing expenses earlier rather than later, creating reserves for potential losses or contingencies, and adopting stricter criteria for revenue recognition. 3. Risk mitigation. The goal of accounting conservatism is to mitigate the risk of overstatement of financial results and the subsequent need for restatements or adjustments in the future. By taking a conservative approach to financial reporting, companies aim to reduce the likelihood of misleading investors or creditors with overly optimistic financial statements. Number 4. Transparency and reliability. Accounting conservatism enhances the transparency and reliability of financial statements by providing users with a more cautious and prudent view of an entity's financial position and performance. Conservative financial reporting reduces the likelihood of overstating profits or asset values, which could lead to inflated valuations or misinformed investment decisions. 5. Regulatory compliance. Accounting standards and regulations often require companies to adopt conservative accounting practices in certain situations, particularly when assessing the value of assets, recognizing revenue, or accounting for contingencies and impairments. Compliance with these standards helps ensure the accuracy and reliability of financial reporting. 6. Criticism and debate. While accounting conservatism is generally regarded as a prudent approach to financial reporting, it has also been subject to criticism and debate. Critics argue that excessive conservatism can lead to understatement of assets and earnings, which may not accurately reflect the economic reality of a business and could potentially obscure its true financial health. 7. Balancing prudence and realism. Accounting conservatism requires a delicate balance between prudence and realism in financial reporting. While it is important to exercise caution and prudence, it is also essential to provide users of financial statements with a fair and accurate representation of an entity's financial position and performance. Overall, accounting conservatism serves as a foundational principle in financial reporting, guiding companies and accountants to adopt a cautious and prudent approach to recognizing and reporting financial information, thereby enhancing transparency, reliability, and credibility in financial reporting.